Hi, this is Dr. Scott Young, and today we're going to have Jeremy Whaley come on, and we're going to talk about some business issues, and we're going to get into this on a lot of cool levels in the Post-NESARA series. Coming right up. So what's up with yourself, man?
How you doing, buddy?
All right. You and I talk so much on, we DM each other, so it's like, I mean, he's guy I will complain to, like, and he listens to my complaints and I listen to that too, so it's how we do.
This is the greatest thing about the whole last 4 years is all the strangers that we've met on the internet that have become truly good friends. And I consider you one of those. I've got a handful. And it's just weird how God brought people together. And, here we are.
I'm coming up on my 40-year reunion, and I've been thinking a lot about it, with some people. And, you knew those people. I went all the way through from first grade through. And so like it was all through, and there was several of us that went through in that same kind of way. Where nowadays is a little bit more transient. Even then there was some transient nature to it, right? But they only knew me the first 18 years. Come back on the 40-year reunion, and I'm like, double the time is left. Well, I'm feeling really strong like about this. And you guys are going to feel this in this post-NESARA kind of time frame. Like those other friends that you kind of knew and you kind of, sorry, but you left behind a little bit because they weren't really awakened at all. And now you have these new set of people. It's going to change that. And it's probably, they're going to find their own friend set that is, like kind of, growing themselves up too,
That's a funny thing. It's not what we're going to talk about today, but it's a funny thing you mentioned that because I deal a lot with transformation and people moving to different phases of their life. And when they get into the trading stuff that I teach or business or other things, what they find is their family doesn't support them and their friends that they know don't support them. And it's really what you just mentioned, the people that you knew those first 18 years, they knew you back then,
right.
And they still judge you from that.
Right.
And they don't realize that you've gone through this transformation. And I think this whole Great Awakening thing is another aspect of that, where people have woken up and they've changed politically. They've changed their, in many cases, religious biases, not necessarily their core faith, but some of their preferences and dogma. And there's so much that has changed. And people that knew you before, they keep remembering, oh, you were that. It's like the people, the Saul to Paul thing, the people that knew Saul
Correct.
before, they couldn't quite believe that he was transformed. So, if any of your listeners are experiencing that, take heart. It's okay. It's normal. And you just find a new group of people.
Right. And I think people like, truth is like, Jeremy and I, when we look at this kind of thing, we're on the screen, you see a portion of us, and then you don't see the other side of that, with that too. And I had a guy, he was just saying on YouTube, he's like, man, with your faith, I would love to have you jump over to my foxhole, kind of thing. And I'm like, yeah, but you haven't seen me, with Jeremy specifically, like you haven't seen, like me freaking out. And we all freak out, so like, this whole part of the series that has come on is reimagining on the post end of this thing. I mean, we are so freaky close to this thing over. And the Trump thing that I talked to on Patriot Underground this morning, if you guys want to watch it, go to the Telegram channel and you'll see it all with that too. But we talked a lot about the judgment, the fake judgment with the NESARA stuff, or excuse me, the court systems. And that's part of the NESARA part, is that we have the court systems flipping over. We're going to talk today more on a general business issue that is it, and some of you are going to be like, I don't get it. Why is that a big deal? But when I'm going to throw some of this stuff out to you, I mean, like Jeremy and I, and he's been doing this for a while too. You're going to see people freak out when they have to change. I mean, the way that financials and the way that you actually, calculate stuff without the IRS and without some of the ways it happens is going to mess people up. And that seems small. Now, many of you go, I just wish it was here yesterday. I get it. We're coming. But when you see it on the other side of this thing, you'll go, wow. I mean, and if you ever went to, and we intend to have conferences down the road. Jeremy's going to be a part of these things too. But just to teach some of these people, because accountants are going to be walking and going, I don't know what I'm looking at this with. So
yeah. But it's, you say people are going to be freaking out. It's going to be a good freak out.
yeah,
I mean,
but
look,
there's
when you
going to be
suddenly
bad
have money to work with
too.
that has been confiscated, it's a good thing to have.
Right.
Yeah.
But there's going to be bad freakouts too, because people are so used to what they had before. And even though you might think, well, I don't want this anymore and I'm giving it away. Yeah, but there's portions you're still going to have to adjust.
Yeah.
And it's going to mess with how you think on those issues with that too. So
Yeah.
be prepared for that. And that's why we're going to talk about this. And that's why we're going to come up with many more topics related to this kind of thing too with that. So again, you can go to trademaestro.com or jeremywhaley.com. And would you talk a little about Trade Maestro just so they know what that is?
Yeah, Trade Maestro is really my main business, and we teach people how to trade stocks and options and cryptocurrency, which you can carry over to futures and forex too if people want to do that. But I teach people how to manage their own money and how to trade their own money. The truth is, the statistics for the professionals are terrible, and nobody ever talks about it. But by published statistics from Standard & Poor's, S&P, if you carry out what professionals do over a 20-year period of time, 95 or 96% of them cannot, that sounds like a round number, but it's the actual stat, cannot match or beat the S&P 500. If people would be better off just to buy the index. But unfortunately, literally 63 million people in America give their money over to somebody else to manage their money because they believe they can't do it. And with just a few, tools and insights, anybody can do it. So that's what we teach over at Trade Maestro. And I'll be happy to work with any of your people to learn how to do that, improve their retirement accounts or just their active trading account, whatever they're working on.
Right. And I think that's a big difference, because he's trying to give you the tools of the trade. And I think that perspective, and he doesn't agree with me on the issues, and that's and by the way, that's totally cool with me, and I might not just understand what he's talking about too at times, but I think what happens is that we need new insights, and that's the point that happens in here with that too.
So I'll say this to your audience. I love to talk with you because we do disagree on things. We have disagreements on something, not bad disagreements, but it's like, hey, this is what I think. What do you think? And we text each other in the middle of the night. I mean, just all the time saying, what about this? What about that? And you say, well, I don't agree. And I'm like, well, I think you're wrong, but we're laughing about it. And,
and we're okay with each other on that.
Yeah. I mean, dogma is when somebody gets in their mind the way something has to be, you are no longer open to the truth. And as a truther, you have to be open and say, well, what else could be true and what may I've missed over here? Right. So, I encourage all of your listeners, just be open.
Yeah. And I think it will help you in a lot of ways. Now, there are, fundamental truths he and I would agree on, in the Bible and some other areas like that. But listen, there are some things that are going to really mess with you. So as we talk about like a general area, can you think about like a couple, overall general things without the IRS? What might what might be some of those changes that are kind of coming out there?
Well, the IRS it's like, let's do anything that's good and let's just put a blanket of oppression on top of it. And that's what the IRS is. How can we oppress it? Now, here's the weird thing, as a business owner, we have way more flexibility with the IRS than individuals. The citizens are the ones that are going to have the immediate biggest realization that everything changed. But
and it's going to be simple for you, by the way, too. It's just, you're just going to see like, your federal and state, they're just going to wipe out. Yeah. And you're going to go, whoa, kind of thing.
So if we back into it, let's start with the individual and we'll kind of land with the business. You just imagine whatever somebody's paycheck is, the way that they pull this off. Somebody's making $10,000 a month, but you don't even realize you make that, because by the time you see your paycheck and it's deposited, you're depositing 7,500. So you're living on a budget of 7,500 a month because the government has taken out 25% or whatever your number is, before you even see your paycheck. And so everybody's adjusted to it. It's the whole frog in the kettle thing. Business owners do not have that benefit. Business owners have to pay quarterly. And we got to like track everything. So you have to pay all these accountants to do stuff, which creates an entire industry. So there's a whole industry that's going to get turned upside down.
Right.
But the difference is with business owners, they don't take it out first. It's the other way around. If you're doing a retail business, you're taking it out from the sales that you're making. So now we won't have to do that. And you can speak more of that than I do, because the type of business you and I do is different. You do a lot more. You have to collect sales tax.
Right.
But just all that stuff that is on the back end that the individual doesn't have to think about. For the individual, your $7,500 check will suddenly become $10,000. It's like getting a $2,500 a month raise. For the business owner, it's just all this detail that we have to hire accountants to do that, it just turns into flat accounting instead of all this crazy IRS tax stuff.
Well, you said this, you said that point too. And well, I guess I could bring this one up here. We'll just kind of, this is slight, change over here, but it's totally related. Okay.
Yeah.
Now, there are a couple conversations, and we don't know the full truth on this one here. Now, we know that some of the NESARA funds, there are trusts that are out there that have to refill specific coffers. One of the specific coffers is Social Security. And it's been just terribly underfunded. And frankly, they steal from it all the time. This was meant to be like, you put in $200, you get back $200. That was essentially the point. And yet it hasn't been that way. People are, living on $750 a month, $1,100 a month. And you're going, wait a second, how's that fair? And when you calculate the amount that they put in, versus what they got back, it's not even close to the number with that. And so do you think like Medicare and the Social Security will still come out of your check?
You're so much more qualified to hypothesize on that than I am. What your listeners don't realize, unless they're a business owner, is when you go to work for a company, let's say that they're paying you $10,000 a month. You're not costing them 10,000. I'm using a round number, but let's just say that's a number. You don't cost that company 10 grand. They withhold the 25% of your income tax from you, but then we also have to pay other taxes just to have you as an employee. Right. So all that stuff disappears. And, that's what, the whole payroll thing, there's nothing I hate. I don't have employees right now, but when we had 15 employees, it was like, I absolutely hated getting another employee because it added so much additional back end chaos that I just didn't want to think about.
Right.
So, that just in theory just completely goes away. Now, the question is, what is the employer going to be responsible to hold in the future? I personally am of the opinion, and you have the research a lot better than I do on this. I'm just of the libertarian background philosophy on this.
Yeah.
I just think the IRS is so fundamentally un-American. You look at the Tea Party, and I'm not talking about the political Tea Party, the Boston Tea Party, and you look at
different time frame, right?
Yeah, different time frame. You look at what we were fundamentally founded on, which was anti-taxation. Like, how 100 years ago did the people forget that and allow the IRS to exist to the point where we are today? So in my opinion, when you get rid of it, assuming that the cabal and all that gets rid of it, or we get rid of all that with the cabal, I should say, would they put something else in that's a new burden? In my opinion, no.
They're not going to do. No, see, and this is a great point too. So I'll just say it here. IRS was under the 16th Amendment. It comes in 1913 at the same year as the Fed.
Right.
And when you look at where the money goes, when you get the IRS money, it goes just directly over to Treasury just to make it look okay. The next phase of that money is to go to the Fed, and 6% of every dollar that's put in there is going toward the Fed bankers and the Queen of England. When you understand the nature of how sick it is, it leans into the 14th Amendment under the fourth section, which is pre-time frame. It's 1868. 1871, they changed the constitutional republic, and basically they wiped it out. And that's when you come up with the democracy conversations. And they always talked about democracy there. What that piece of legislation that happens in 1871 did is, it's fascinating because I've mentioned this before, but basically this, instead of saying the Constitution for the United States, it's the Constitution of the United States. It just changed where it pointed. And there was all these little prepositions and adverbs that were like totally nutty, but it's how they think. And it adds the layer of DC in there. Now, when you have that, when you have the 16th Amendment, it was never supposed to be around for more than 20 years. And it was supposed to be 1% of Americans were going to take out 1% of their amount. Well, then they upped it, obviously, in 1933, because you have, one of the first layers of the gold standard dying in the systems because they pulled back the gold. So they replaced it in here in that way. And they added a layer they added inflation, and then they added, income tax for everyone with that too. Right. And so the postulation has been to run the government is that, maybe, and I'm not saying this is for sure, maybe they might take 10% of the IRS people and move them into the sales tax, a federal sales tax. And so the postulation is maybe 14% sales tax. And again, that is a constitutional level tax where the IRS or taxing someone's, in essence, property is illegal with that too. So that's a little bit of background on that kind of thing and why I believe it's just a very simple, system that will die with it when you're in that sovereignty moment with that. So again, we were talking a little bit about, Social Security, Medicare. I mean, do you have a perception of what that might do? Do you think that they might take it out? Do you think they might not?
Well, see, Social Security and Medicare, that all, and I haven't dug super deep into this, but my understanding is all of that was New Deal stuff.
Same time frame too.
Yeah, I mean, we didn't have, the reason they created Social Security was so that the government would say to the people, "Oh, you're old and you're afraid of bank failures and you're afraid of another Great Depression." We didn't have Social Security before that. And if we're truly in a libertarian model, which is, every individual is responsible for yourself, then the government shouldn't take care of that. So that is actually a social program. It's a socialist type of a program.
Right.
And in my opinion, there's no place for that in our government. Now, I know a lot of people would disagree with that. A lot of people really count on it. And I don't think they're going to just cut it. I don't think they're going to get rid of it because there's too many people that are planning on it. But for years, I mean, I'm 47 years old, and literally since I was 19, I just assumed that there would be no Social Security. I've never thought about it and thought, oh, I can't wait till one day I get my Social Security. And if I did, then, it wouldn't be enough to live on.
Yeah.
So, the whole fallacy, if you will, is Americans, and really the whole world, but the American population has been conditioned. You get an education, you go to school, which now a college is, you come out with $150,000, $200,000 in debt for a degree that you probably don't even need. You go get a job, you stay in a series of jobs now over however many years, you keep paying your Social Security. And by the time you retire, hopefully you have enough nest egg to offset what you're going to get from the government in the form of Social Security. That is such a messed up retirement plan. Right. And we're seeing it now, for your generation, particularly. I say your generation, that's not true. You and I are the same generation, but for baby boomers, what I meant to say, I'm
kind of on
you're on the edge there.
End. Yeah.
The whole baby boomers and everybody before that system kind of worked. For Gen X, It really started to break down, and millennials, millennials will switch jobs every 2 or 3 years. There is
Right.
no long-term career. It'll be career in a field, but not long-term. And now what we're seeing is we're seeing that Gen Z they're having multiple jobs, multiple sources of income. It's really a lot of what I've taught for years. The problem is it's not always passive income, so there's not as much to
Right.
build from, but they're really the most savvy financially of any
Mhm.
generation because they've watched it and they've had to adapt. And so I think that's where we're going to go. I think if people are really smart about thinking about their retirement, forget the payroll deductions and social security and all that, just do it right. And then you don't need the government. Just
Now,
plan the multiple income streams.
Jeremy's not saying this is like next year. Okay, that's
No.
not at all what he's saying. You're going to have Social Security with a higher amount, and we know it's going to be higher. I can guarantee you it has to be raised, and we don't know what the number is, but it's got to be raised. And I've heard this actually from many sources, it will be. But, maybe 10, 15 years down the road, 20 years down the road, I don't know that number, but some point or another, yeah, we would like to see people not be on that particular system, because it kind of leaves you back into the UBI kind of
Yes.
concept. And again,
Let me kind of qualify it and just
right,
really clarify what I just said. A lot of what I just said was kind of my theory of what things should be. Is that what's gonna happen? Probably not. I mean, I can almost guarantee outside of me having the power to sign the piece of paper, I can guarantee the government is not just going to cut off all the Social Security right
no,
now.
no,
I
no,
can just guarantee that it's not going to happen. It would be a revolt. To the same way that I sit here and I say we're not going back to 1950s pricing, I can say we are not going to have Social Security cut off right
he
now. It
he
will be,
knows he knows how much that word 1950 or fairies 1950 pricing pisses me off.
yeah.
You know,
Yeah, and people who say that are really it's naive is what it is. It's
yeah,
naive because they don't understand how it would affect the bigger picture. You've
sure.
got to realize that government does have a job. And the job of the government is to serve the people on the greater level. It does not serve the people to go through and create something that cuts all housing values from hypothetically $500,000 down to 125. It doesn't serve the people because there's a lot more people than you realize that have their houses paid off. That is their net worth. If you just then go wipe that out, it doesn't serve anybody. It will piss off a large percentage of the people, and that creates a bigger revolt than, frankly, the any of the other stuff.
The
And so
fix,
you've
yeah.
got to realize that government has to manage that, and they have to manage the way whatever Social Security transition happens. I totally agree with you. The prices, or the payout's going to go up, and it may go up for all the way through baby boomers, probably all the way through Gen Xers,
Right,
and then maybe you get to Gen Y, Gen Z, and
and then it
these new
kills.
Gen Alphas, and
Yeah,
maybe it's starting to taper off a little bit, or maybe they've created a new government system. Or more likely, I think what will happen is what so many politicians have proposed over the years, which is create a system where the individual can manage it. So you have a pay in, they force you some sort of a savings program, but you have the ability to manage it and say, well, I want to put my money here, I want to put my money there.
yeah,
And, in the theoretical quantum financial system, maybe that
mm,
becomes really easy.
right,
Right now, it's not because it's all controlled by the Fed and blah, blah, blah.
right. No, that's an interesting idea. Had never really thought about, like, instead of the payroll taking out that mythical, what, 6% or whatever the number is, they might, say, well, you have X, and make up a number, $2,000 a month. you know how do you want to manage that? you know and
Yeah.
and I do know that the QFS is really about letting you see the whole financial picture of yourself, like, all of your credit lines, all of your banking, and all of your IRA kind of things, those other account kind of things. And
What I
so,
really hope will
interesting.
happen is, you could call it a government savings program, meaning it's a program that the government helps condition, or not condition, but train people, educate people, that's the right word, on how to use, but they give people choices. It's like, is government organized health insurance, is that inherently bad?
Huh.
No. What's bad is to close off the free market and to say
Right.
you can't
Right.
do this and you can't do that. And because we're doing this government thing over here, now everybody's premiums went from, in my case, it went from $600 a month for my family to almost 3,000. And so now you have all these
Really?
people, yeah, then the people that are listening to this, some of them go, no, that didn't happen. Well, baloney, I can show you that's exactly what happened. Because for really small business owners like me, we don't get some of the other options that other
I
people
can't
have.
get those. And by the way, I have a short-term plan. I do this short term. It's like every 6 months to a year. And by the way, in September of 2024, they were like, it's illegal now. You can't do the short-term plan. And I'm like, screw you, man. I mean, I'm loving that short-term plan. It's exactly what I want, exactly what I need,
Yeah.
works exactly the way I want it. And and I think that some of that stuff is going to get fixed, with that kind of level too.
Yeah. But using that as kind of the metaphor without getting too far off on healthcare, I think if we look at a government savings plan, it makes sense, in my opinion, to say here are government education programs,
Yeah,
which that's a whole nother topic there of what financial IQ should be taught.
sure.
Um, but here's some government programs that we've sorted through, and here's how we would recommend doing it. But by the way, you could do all this, and then just leave it up to them, and somebody has the choice to opt in or to not opt in.
Yeah. And that's very possible. So what I guess we're saying here and this kind of level is there might be Medicare, Social Security might be coming out of your paycheck, or you might be able to opt out of that. I don't know what that number, I mean, how that will work, but realize that's a very tiny percentage of your paycheck. I mean, that's
Yeah.
essentially like what, 6 or 7%. So that's a very tiny number in that realm when we were talking about that way too. Now, what happens with payroll companies is that what they do is that, using your mythical $10,000 a month, which I would love to have that, but that's another conversation. So mythical $10,000, let's say, and it's probably more like 6,200, or 5,800 that you would actually make if you realize it. And that's by doing some real good things in there, giving into your 401k and on and on. But what happens there is that you've got what payroll companies do is that they will take out that $4,200, mythical $4,200, and they will set it aside. And so I personally made my company be a twice monthly payment instead of every 26 paychecks or every other Friday. I didn't like the every other Friday thing. I wanted to be 24 paychecks in a month. So what they do is they will hold that money in an escrow-ish account kind of thing and jump it up there together, hold it aside, and they actually invest that so that they make money. And then at the end of the period of time, they made 5% off of your money. Then they go off and pay it to the state, federal, whatever, whatever agency. That's how payroll companies make money, other than, charging me a premium. But it's not a huge premium that most, payroll companies do with that too. So that's going to change a lot of that stuff, which means kind of deductions are not relevant with that too, right?
Yeah. So that's what a lot of people are we talking about business deductions?
Well, yeah, but your personal deductions, like I'm deducting 3, or taking out 2 deductions. That's all IRS kind of stuff.
Yeah, absolutely. So, the biggest reason that you hire an accountant, well, there's a lot of reasons,
Yeah,
but hire an
one of them.
accountant around tax time is to help you figure out what can I do to reduce my cost basis or my taxable basis. And cost basis would be a business term. Your income basis is what I'm trying to say. I'm not an accountant. I don't do taxes. But you want to lower the taxable income so that instead of paying taxes on 100,000, you're paying it on 80. So if
Right.
you had X number of children, those are all a deduction. If you have mortgage insurance, if you have, just go down the list, charitable donations, you donate to a 501c3, blah, 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 all the different donations that you can have and all the different deductions. And suddenly that $10,000 that you had that was taxable got reduced down to 80 or 70 or 65
Right.
or 50. And that's how you get to the end of the year and you get money back because your accountants helped you figure out how to deduct a whole bunch of your taxable income.
Well, and that leads us into this one. So tax accountants, what he's getting after is that you have your tax accountants and what they're, so the normal person is going using our fictional high, pay here, $10,000 a month. Then you have paid out, use my math, $4,200 a month. And then what you do is that you look at, did you take out more deductions than you really needed to? X, you get back some money from the government, but realize that was free money for them to use without any kind of interest. And see that, these people like, H&R Block kind of tell you these little stories like, go on a vacation with the money from the government. I'm like, I'm not giving them anything. I mean, when I went to, when I was just a employee, I was like, I want to pay $100 or, get $100 back. I kind of said, be as close to that, like break even kind of point. But as a business owner, you can't even get close to that kind of thing. Cause then you could have a crappy year and, and you're going to get all of your money that you had deducted. Because you had so many losses or you have so many, profits that you got to pay a ton of taxes and you already paid taxes with it too. And then you have this big chunk of money that you got to write a check for.
Yeah.
So if we think, I'm sorry, if we think about some of the areas and you kind of mentioned it, when we look at it, you have your gross profit, which is how much the business comes in. Then you deduct out your cost of goods. I mean, some of the variable assets that happen, and then you have this thing called net profit. Net profit, or excuse me, sorry, just profit.
Yeah. Gross revenue and
gross revenue, gross revenue, and then and then net revenue. Excuse me, I said it wrong. Gross revenue, net revenue. Net revenue. What you then start doing is you take your fixed expenses, your daily, your monthly expenses and rent and everything else, and all your employees. And then what you do is that you come down with a net profit point, okay, whatever that might be. And let's just say, for the heck of it, it's your company netted $5,000. But when they do this extra thing called EBITDA, which is just a little bit, all the other possible write-offs, you're looking for other write-offs, your charities or this other kind of thing. And so companies that probably just make up a number, if they made $5,000 a month, that's $60,000 of profit a year. So that business looks like it's it's doing really well, but then they wrote off with all these other write-offs. And so we get really complicated with that too. So when the IRS is gone, how will tax accountants actually do this stuff? Or will they do it at all?
Well, do you need to? I mean, some of it just becomes irrelevant. I mean, one of the biggest benefits, just so your audience understands, one of the biggest benefits of owning a business is you get to pay your expenses first. As a individual working for the government, let's say you're working for Homeland Security, whoever you work for, they're going to give you your check and that's what you have. And now you get to go home and you get to pay they take out all the taxes and then you get to go home and pay your mortgage and you get to go home and pay your kids' education. You get to go home and pay for everything. And after you've paid all your expenses, what you have left over is your leftover. In business, we do it exactly backwards. In business, if I have $1 million in revenue and now I get to go pay my employees and now I get to go pay for my own personal development that was business related. And I get to go pay for a business automobile and I get to go pay for the business building. and I get to pay for part
No,
of
you have to
a
separate your personal and business. I mean, you really do
yeah,
have to be careful because
yeah,
they will knock you
oh
for a
yeah,
loop if you throw in those personal things
yeah,
and you
absolutely.
really didn't do
But
it.
I'm just
So,
saying that the business as an entity is
right.
paying all that. They're paying the business mortgage. They're paying all the business expenses first. And then you figure out this is what we have left over. And now we only pay taxes on that. Well, if we don't have to do the IRS hoopla anymore, then that would just become something that the accountants didn't have to worry about, which is a huge portion of accounting. I mean, it's just huge. You have entire industries that do nothing but tax accounting and tax attorneys, and it's just ew.
And I think that's, I mean, I think what we're gonna see is these tax accountants, and I've been saying for a long time, we need accountants. I mean, most people have not budgeted themselves. And I'm not talking about the tax accountants. Those same guys that do the accounting and you think of as bookkeeping and tax accounting, most people have not lived in a budget in their whole lifespan. And when you come to a value based currency or an asset backed currency, you still are going to have a budget. And if we go backward in time, people lived on a budget. See, today if we're underneath our budget, we just pull out a credit card and we go in debt with that thing too. Well, when you have a debt-based economy, debt is just the vehicle out there. Whereas in a non-debt based economy, it's going to be the value of the money that you have. So you better be able to deal with those. So I mean, under that kind of circumstance, what do you see more for accountants that they could do?
I think accountants are fortunately going to get to focus on doing accounting as opposed to playing the game of, hide the winky somewhere. Where do we need to get rid of this? That's what accountants have turned into, is just basically IRS code followers. And a lot of times the accountants don't help you. I have horror stories. We had an accounting firm because what we would sell products, and let's just say the transaction was $1,000, but we offered a payment plan. Well, we would account for it as if we received the money, but we didn't get paid for over 12 months or 16 months. Well, we got to the end of one of those years and we had like over $1 million of sales that we had to pay taxes on that we had not received money for.
Right.
And that was an accounting mess up. Like that was in a place where we fired our accountant because she didn't do what a good tax accountant would have done. Well, we wanted to deal with that kind of crap. Why would I ever be taxed for something for money that I hadn't received? It makes no sense to me.
Yeah,
It's
it's
illogical to me.
you guys don't understand. I mean, what he is talking about is something I have had to deal with that too. I mean, a patient comes in, hearing aids. I'm just going to tell you, for a pair of hearing aids, they're $2,500, $5, $6, $7,000. They're very expensive items. Okay, and again, NESARA is going to reduce some of the costs and prices and all that stuff. That's going to be fun. But here's what happens if we find out an insurance is going to pay, and some of these insurances pay the whole amount, like the whole $5,000. Well, so we have to go buy the hearing aids. We pre-approve them. We go buy the hearing aids. We fit them on. We have to file it with the insurance company. Then they screw with us and they go, well, you've got to put it through Medicare and get a denial. And then you got to go over here. And then, they go, and I go, wait a second, what happened? Why didn't you pay? Oh, you're right. Let's take 20 more days and we'll finally pay you. And then they don't. And you're just like, and you've already paid everyone. You paid employees, you paid your cost of goods, you paid the taxes. I mean, and this kind of stuff is such a like cash flow nightmare with that too. And that's what he's talking about. I think that's gonna massively change.
Yeah, but it will not get rid of accountants. When I started my first really big business, I had my business partner, and the first person we hired was an accountant that we started paying $150 a month to. And especially if you have business partners, it's just so important because what the accountant does is they
Right.
become that impartial third party. that you can go to and you can say, where did the money go? Did he steal this? Did such and such do that? And then you might say, oh, I trust my business partner implicitly. So did I. And it turned into a terrible relationship. But the accountant, that person is so important to a business. So what I would like to say, answering your question, you said, what's going to happen to accountants? I think they're going to actually become accountants. Like they get to do the job of a mini CFO. I hate to use that term, but they
Yeah,
become more in a financial advisory and
right.
accounting role where they're truly doing the job of here's where the money's going, here's where it needs to go. Advising is an accounting issue and not being burdened with IRS regulation that it's impossible for every accountant to know because the IRS agents don't know all the codes. I mean, it's
Well, and
impossible.
I've seen that same thing too. I mean, the tax. I mean, there is a funny guy on Twitter or TikTok, excuse me, and he'll talk about like he talks about like as if you're the IRS agent and you're the taxpayer, and he goes back and forth and is like, you have to pay me. I mean, how much do I have to pay you? We're not going to tell you, and then you have to come up and tell them, and then they go, well, that's not enough. You're like, what? I mean, this is that kind of stuff that goes on. And that kind of area is so difficult to deal with that too.
There's nothing
Uh,
more criminal to me than the whole idea of the self-regulated tax program, because you think about it, the government mandates that you go to school. They require certain government level quality education. Then you get out and you have to pay them, but they don't tell you how much you're supposed to pay them.
right.
And they didn't teach you how to do the taxes. They didn't teach you how to play their game, but then they're expecting you to play their
But
game. And if you
they
don't play it
change the
right, then
game
they're
every
going to
year.
penalize you if you don't do it just right. That is the most criminal, not just cabal level, like this is mafia level
It is.
chaos. And if the American people would just in one unanimous voice say no, and just literally say no, we need a tea party. We need to say no. But we've been putting up with it for over 100 years. So of course, they're not going to say no, but it's because it's what they expect. It's what they know. It goes back to oh shoot, I forgot. You know what? The cave. What was the guy's cave? Plato's cave. Do you remember Plato's cave?
No,
Okay, so you never heard the story of Plato's cave?
I guess not. Maybe if I maybe, but
It's a
go ahead.
little tangent. You want to hear it?
Okay, sure.
Okay, so there's a story of these people that grew up in a cave. They'd never seen daylight, and they were chained to the wall in the cave. And every day, people would come behind and use the light that was coming through the entry of the cave, and they would show little shadowy figures on the wall, and they would tell a story of what the world was. And they told the story over and over and over again. So the people who were chained to the wall, all they knew was the story they had been told and the images that they had been revealed. Well, one day, one of the prisoners gets cut free, or somehow he escapes, and he crawls out of the cave and he sees daylight for the first time, and he walks around and his eyes are adjusting. He's trying to figure out what it is, and he realizes that the world is actually completely different than what he had grown up his entire life being led to believe. And so he goes back into the cave and he's all excited to tell the world, tell his friends, tell the people that he's been chained up with, tell them what the real world is like. And he goes in there and they say, no, that's not true. And they keep telling him the story of the narrative that they've been told over and over. And,
Right.
they literally want to kill him because he's trying to break the narrative. And we have a society now that is, figuratively, they are the people in Plato's cave. They've been told the story. You got to pay your taxes. You got to do this. You got to do that. And the government is always right. And you shouldn't question it. If collectively society would just break the chains and realize the light's over there, the real world's over there, business wouldn't be oppressed all the time because of all
Right.
the IRS crap, and individuals wouldn't be oppressed all the time, and we wouldn't be losing so much value to inflation, and people wouldn't put up with the kangaroo courts that we're seeing today, and they wouldn't be putting up with it. But they've been conditioned, they've been told the narrative over and over and over again, just like Plato's cave. And as long as they believe it, that will be their reality.
Amen. Boy, preach. That was a good one. I did remember it after that point
I
here
figured
too.
you did.
It was like I just couldn't put the connector in there with that too.
Well,
So
I couldn't think of the name Plato.
there you go. Well, Play-Doh dough. So when we think about the value of a business, Post-NESARA, but we do all these write-offs that we actually reduce the ability of the business, in essence, the overall value of that business. We're all, because we're all scared of that net profit number and paying taxes on it, which is called capital gains tax, okay, or cap gains. What happens when we no longer have to worry about that? Do the business actually, do you think businesses will increase in value, or will we see a decrease in value? I mean, increase or decrease in value? What would you think on that?
Imagine a runner running down the street and they've got one of those bungees tied to them. And maybe they've got a weight tied to the bungee so they can move, but they're constantly being held back. And then one day somebody cuts the bungee and you're free to run at your full speed.
Right.
That's business. That's business in the IRS. So the IRS and everything that government does in terms of regulation is literally, I hope everybody understands that everything the government does in terms of regulation, what is the name regulation? It regulates, it slows down.
Yep.
That is the metaphor of the bungee tied to a weight behind a runner. When you cut that, you're free to run. And now what's going to happen is business is free to be what business should be. So if you've ever thought as a business owner or as an individual, it shouldn't be this way, this is too hard, it shouldn't be this way, just imagine cutting that. Cut that bungee that is regulating you and pulling you back. It's like in electronics, you have resistors. What do resistors do? They slow down the current. They slow down the electric thing that's going through. A regulation regulates it. It slows it down. And the idea behind it was, back in the 1860s, 70s, and 80s during the industrial age, the citizens, they said, oh, well, business is running too good.
And they're too greedy or whatever.
Yeah, and they turn that into, well, it must be greed. And they turn that into, we got to slow them down. So regulation came in to slow it down. Well, once you open that door to regulation, what it does, it slows everything down. So imagine cutting the cord. Now business can be what it should be.
Right.
Individuals can be what they should be. You say, well, I shouldn't have to fill in the blank because it's slowing me down. Well, let's just get rid of the slowdown. And now you're free. So you're going to see business flourish. You'll see the valuations of business. I don't know if the valuation will be different, because that's what the accountants do right now is they get rid of all the regulation. They say, what should the value be? Well, here's what the value would be. So that's what we're going to sell it for. But now you can go actually analyze it without having to go through as much analysis. You can say, well, if I didn't have all this regulation, then what could the value be? Well, here's what we could do. And now just cutting all that crap out, this is what the business should be worth. If I have
do you think there's possibility though? Because I'm just guessing. Okay, listen, I don't know that for sure, but if we've regulated and we deducted everything and taken it off, I mean, that's that much less that we get, that the business owner gets to spend. And you go, oh yeah, you just want more money. You don't understand. Business owners that are good people, and there's a lot more than are good people than the bad people. Okay. What good people want to do is go, listen, if I can be bigger, I can add another store. I can add another, thing, and I'm going to employ more people. And then to keep my people, I need to pay them better. And all this other stuff is great for you. And then we put better supplies, better equipment in there. Well, that is great for the person. It's great for the business, and it's great for the community with that too. So that's kind of where it happens. But is it possible? And this is something I'm pontificating. This is Scott. Is it possible that we're also going to see the opposite of really crappy businesses? I mean, that really were crappy and they stuck around because the good old boy network or whatever that might happen. Do you think that's possible out there too? Hard to say.
I'd be making up an answer, but let me ask. So I want to say this to your audience. You and I have very different personalities. You have a music background too, ironically, but I am a true entrepreneur, innovative creator. Like I am all about inventing. And entrepreneurs, people with my personality, we're the ones who create ideas. We create stuff that drives ultimately the businesses that bring in all the jobs and stuff. We're a very small percentage in terms of personality style. You are much better at the management piece. Like you and I would work really well together in that context because you deal with details in a way that I can't. I literally, it breaks my brain. So with that as a background here, so your audience understands that. By the way, if anybody wants to learn more about that personality type, read a book called Rocket Fuel. If you've never read Rocket Fuel by Gino Wickman, it's a incredible insight into how businesses operate personalities.
Right.
But coming back to that, so you just went through all those lists of things that hold back businesses. You know what I'm thinking as the entrepreneur? I'm like, that's stupid. Like, that's stupid. It's just stupid. What if we just got rid of all the stupid stuff, the stuff that entrepreneurs are saying, well, that's just stupid, I don't want to deal with it. Ask me right now, Scott. In my previous business with my partner, we had a bunch of employees. Ask me right now, why, Jeremy, are you running a business with 0 employees?
Weight off your shoulders.
No, ask me the question.
Okay, so why is it better when you don't have all those employees for you?
Because I don't want to have to deal with it. So guess what I'm not doing? I'm not employing 15 families that my ideas could support. What am I doing? I'm outsourcing.
Right.
I'm outsourcing everything. If I have to hire somebody, I outsource it.
Right.
I don't have a payroll because I don't have a payroll tax because I don't do payroll because I don't want to deal with it because it's stupid. So you want to know how
HR, and then there's personalities.
Yes.
And
I don't want to have to deal with like, so I remember the day that we'd added all these employees and then suddenly we get slapped with a fine because we didn't pay a workman's comp. I'm like, they're sitting at a computer typing.
Right.
They're not going to chop their head off. Why do I have to pay workman's comp insurance? Oh, well, they might get carpal tunnel. It's like, that's stupid. See, this is like your audience doesn't understand how often as a business owner, we just think that's stupid. And that's what regulators do. And it's all a function of over the years, people are like, oh, you should do this, you should do that. It's all the greedy guy. It's not. The truth is, and here people have to understand this, entrepreneurship and business is a spiritual calling. When you become an entrepreneur and you're taking your creativity and your ideas and you're putting it out there and you're turning it into something that generates revenue and it can provide jobs for people, that is a spiritual calling. What people don't understand is when the business owner has more money to work with, we don't hoard the cash. You would be shocked. People would have your employee, or not your employees, your listeners would be shocked to know how little cash business owners usually have, because all of that money is being invested into something. And it's not, oh, well, they just invested into a house so they can make more money. No, they're investing it into perpetuating the entrepreneurship because that's what we do. We can't help it. Or, like it's almost like a disease.
Or fixing the past. I mean, broken equipment and
yes.
I mean, that stuff affects either side. Now I'm a person that employs people more, and Jeremy kind of has more of an outsource mentality. And by the way, there's no right in there either. I mean,
I wasn't speaking ill of you. I was just saying,
no. You just
because I'm a solopreneur now, and I don't have a team, and I don't have that partner who helped balance some of that. I chose to keep my team small. When I left that business, I said, you know what? I don't need to have a big operation. I would rather just outsource. But I was actually trying to give you a compliment in that people like you who will do the employee route are more spiritual than me in this moment. I probably will come back to it, but here's this moment because you're providing jobs.
But see, here's the reality, though. You don't understand. Jeremy is actually providing jobs in another way, because other people are providing jobs and he is paying that other person. So it's actually good for the community. It doesn't matter which way you went.
Exactly.
The community is going to go, what's better for us? Because
it helps the economy. I help the economy, but you help the individual because you're taking the responsibility to say, Larry, you're going to get paid on Friday. And I'm not. I'm saying, Larry, I can pay you this Friday, but that's all I'm going to commit to. Yeah. And so, but I'm also the new norm. I am the new norm.
Yeah.
Whether you realize it or not, whether your listeners realize it or not, in the future, we may have an entirely all work for hire economy. And that's an interesting transition here. Everybody should think of yourself as a business because you are a business. When you look at Fiverr and you look at Upwork and you look at all the online sources of revenue that people can use now to create work and to create jobs, everybody becomes their own individual entrepreneur through that route. So everybody listening should start thinking, well, what if I was in business for myself? All of this impacts you.
Right. And so that leans in this way too. I mean, we have these vehicles called LLC, S corporation kind of thing, and C, but those are for more larger businesses versus nonprofit businesses. And nonprofit doesn't mean they never pay taxes. They just don't pay capital gains. They do have sales tax and other kinds of so other kind of areas. I mean, excise taxes or whatever that might be. But when we don't have to worry about the IRS, do you see those structures even existing or not? I don't know.
My response is, I hope so.
Why? Tell me. That's a good question. Why would you want both of those, or at least those three different structure points I'm listing there?
Yeah, well, the LLC, limited liability corp, the S corp is a sole proprietorship, basically. But that's not a true statement. I don't know why I just said that. It's a subchapter of the C corp.
Subchapter, yeah.
The sole proprietor is the opposite of that. If you're a sole proprietor, you're doing business as an individual, but
Yeah,
you don't get the benefit of the LLC protection or the S corp
yeah.
protection.
You don't want to do that.
Yes. So it's actually a legal thing more important than it is an IRS thing.
Right.
The nonprofit is also that one. That one's a little bit unique in the sense that with the IRS, it has some uniquenesses that outside of the IRS benefits for the nonprofit, I think everything should be in an LLC. But if anybody's thinking about doing business really in any sense, the LLC just makes sense. Like I had a guy early in my business career said, if you don't do an LLC, I'll kill you. And it was the greatest advice ever. Now, that time LLCs were pretty new, but the LLC, what it does is it creates a barrier, it creates a wall. And I'll tell you a story of a guy that I was working with, and he got a judgment against him for, it doesn't matter why, he got a judgment against him, and the court ordered a whatever they call it when they take your money out of your bank account. It's not a lien, but you got a judgment against him, and they confiscated funds out of his bank account. And there's a term for that. I just forgot it. He freaks out. And then he told me, he's like, they didn't touch any of my business money. And he calls his bank and he says to the banker, he said, well, look, they drained all of my accounts. He had like 3 or 4 accounts. Everything was zero. He wakes up, everything is zero except for his business account. And he says, is that money going away? And she said, no, they can't touch it. It's in an LLC.
Right.
That is the best explanation right there of an LLC and why you need an LLC, period.
I agree. I mean, but I also kind of feel like too, now I've been hearing in the sales tax arena, when we have non-IRS, we have a NESARA kind of thing, sales tax, there will be sales tax. I mean, now listen, some sales taxes are not allowed to be charged for, for nonprofit businesses. So for instance, they have a particular type of business, they don't have to pay sales tax. Does happen. Not on everyone. But I have this perception that I think we'll have, real charitable organizations that are doing charity kind of thing that should be outside of even sales tax arena, because they're giving back so much of what they're doing in that realm. But I think that you'd also know, well, that's that kind of company versus a for-profit company, which is LLC in essence. Forget about S corporation for a second, but then it would be like LLC would be, well, that's a for-profit company. So you do have to pay your sales tax, which, by the way, what sales tax really is, when you have $1,000 item that you buy, and in the Tulsa area, it's 8.517. So it's a high number compared to some places, right? So what I'm going to charge you is $85 or $1,085.17. And so I take that money in, but I have to apportion it at the, which is a weird time of the month. And I have to pay half of the month I'm in and half of last month. And it becomes this aggregate stupidness, right? And it never,
I was about to say, that's stupid.
Oh, it's totally nuts, right? I mean, and there's all kinds of ways that this happens. But what happens is that then I have to pay that $85. So it's just a through port through me. I don't get it. It's out to the sales tax arena. And by the way, then they charge me if I have to use a credit card. So I have to pay fees on it. So I'm actually in a negative number, on this kind of thing. So, I mean, I think that, I think there's a possibility for companies to say, yeah, we are a profit company or we're a nonprofit company. Does that have any relevance to you or a thought? Do you have a thought in there?
You keep asking an IRS question, and my thoughts keep coming back to a legal question. The legal value of the corporate structure cannot be understated, and the
Correct.
individual needs to understand that. If you have any business dealings at all, even if it's just sole member LLC, you should have an LLC. Whether that's for profit or not kind of doesn't matter. The LLC basically creates a new entity, but then all the taxation wise passes through to you as if you were a sole proprietor. So
Right.
you do the tax return as an individual return.
Right.
Um, when you think about the nonprofit side of that, the nonprofit, that's just a question of if they're doing services that shouldn't be taxable. But that now we come right back to the original question of, what should be, what shouldn't be, whatever you think, oh, that's stupid. Okay, well, in economics, you and I've talked about this economics course that I'm going to put together that I haven't done yet. But the first principle of that is the law of unintended consequences. And a lot of what you're talking about, a lot of the theory that we talk about or the hypothesis comes down to we have to keep in mind the law of unintended consequences. So in 1870, okay, big corporations, the industrial age, they were doing things and mistreating employees and they were making all this money. Law of unintended consequence. Let's go ahead and say we should regulate them. Well, what they didn't realize in doing that, logic said we regulate them. Law of unintended consequences said, where does that play out to?
Right.
So in my mind right now, in that conversation you had just a second ago, I think we should go to 100% consumption tax. This is my opinion. 100%
Yes.
consumption tax.
Yes.
If an LLC needs to buy something, they pay the consumable tax on that, whatever that consumption tax is. Individual needs to buy it, they do it. We get taxed for participating in the economy, but people want to participate in the economy. It's got to be reasonable. It can't be 30%. It's got to be
No.
Honestly, all governments need to learn to operate on 10% of consumption. And if
Right.
they can't learn
And
to
I
do that,
think
then they're too big.
that's coming. By the way, I mean, that is part of it. I mean, if you really look at some of the NESARA things, they're actually talking about
I
if
think that's where it's going, but let me finish this. While we say in theory it should be a consumption tax, law of unintended consequence says, what if I play that out? They set it at 5%, and then there's a war and they raise it to 8%, and then they never lower it. Or they lower it to 7%, but then you know what? We had some buildings we had to rebuild and some roads we had to rebuild. Let's raise it to 10% just to get this covered. Then they lower it to 9%. Next thing you know, 20, 30 years later, the consumption tax is 33%. People say, how
right.
did we get here? And that's the law of unintended consequences playing out. So coming back to the question, what's going to happen and what should happen? Should nonprofits pay tax? Should we have that structure? Legally, we need to have the structure. But as far as the tax piece of it, I just think that there needs to be written into the Constitution. We need a constitutional convention and write it in an absolute maximum of what a government entity can charge in taxes
Yeah.
and for operational purposes. And if they ever exceed that, it comes out of the government workers. See, that's another piece I think should go into a constitutional amendment. If Congress is going to approve spending, they should be the first person to pay it.
Right.
They don't get it. They don't get a raise with the country operating in a deficit.
Yeah. No, you would see, I mean, because here's the reality. I mean, as a business owner, you give a raise to someone, and I always do mine, there is base and commission kind of things that I do, but I always kind of say, I really want it to, like, when the company's doing well, everyone's going to do well. And that's the right way to do it. When the company's doing like crap, no one's really happy in that way. And that is the way that it really needs to operate. And some people are all about like, well, I want my salary. And I'm like, yeah, but there's no incentive to make it go up in essence.
You know where salaries came from?
No, off the top of my head, no.
The industrial age.
Oh,
you want to know where everybody who's sitting here listening saying, I want my guaranteed income. Do you know where that came from? It came from business owners who agreed, I will pay you a set wage. What did you have before that business owner promised that? You had an agrarian society where you had to go earn your living by growing your food and selling your cattle and your pigs and whatever else it was. And if you had a bad year, you went hungry.
Right.
And farmers said, I don't want to do that anymore. I need more security for my family. They were struggling. And there's a little industrial thing over here that says, I'll guarantee your income. And then
Right.
those very people who were begging to have their income guaranteed said, I'm going to screw the business owner because he's the big fat rich guy.
Right.
What people don't understand is the law of unintended consequences. You can't have it both ways. And so now we've got this society where everybody thinks that guaranteed income and guaranteed salary is the way that we were designed to be.
And we never were.
If you want individualism, you've got to take responsibility for it. People are
Correct.
so lazy. They're so used to, if I just show up and work, I'm going to get my paycheck. And they're so conditioned to that they show up and they'll sleep under their desk and still think that they get their paycheck,
Right.
But what you got to understand is there's got to be a value proposition here. Business owners, entrepreneurs, and business owners like you and me, and anybody who does that, we take on the risk. We take on the full risk. And we are the ones who are still the farmers. We're the ones who, if everything can't get paid, we don't get to eat.
Right.
But the employee doesn't understand that. And the government doesn't understand. The government workers don't understand that. They need to understand, if the government suffers, you suffer. If the government's going out of business, you go out of a job. That's how it has to be. And if that doesn't get changed, we will never have this fixed.
Well, and I think really, when you look at, a constitutional republic instead of this democracy, silliness of socialism that really it is, which is what you're talking about. And that's where we get into this UBI conversation, universal basic income. And I'm like, I need to have that. I mean, like, it's only fair for me. And I'm like, you know what fair is fair isn't the same thing for Jeremy and I. I mean, we're not going to agree. If we don't agree on things, I could say, well, you're not being fair. Well, that's, like, wait a second. Fair is a subjective truth, and which is not really truth, but it's a subjective opinion in essence. And so we'll have the same problem. And that's why, to round back here, he used the conversation of consumption tax. The most fair system in the history of the world. If Jeremy gets that the $10,000 a month, right? And so he's making $120,000 a year, and Scott's only making $35,000 a year. Who's paying more in sales tax, in consumption tax? Jeremy. Why? Because he has more money and he's buying more stuff. It's just
how. You mean he's not hoarding it and swimming in his gold like Scrooge McDuck?
Right. You're like, come on, guys. If you make less, you're spending less. And I'm not talking about like keeping you down, but when you make less, you spend less, you're not affecting the economy. But what's happened is that we have these ultra rich people. And when you realize they pay so little in any levels of these taxations, I mean, they use all of these sovereign vehicles. The Clinton Foundation is a sovereign nonprofit organization. It's an actual legal structure. And it pulls themselves out of any level of taxation. They don't have to pay excise tax. They don't have to pay sales tax. They don't have to pay income tax. They got nothing. And they get to like shunt their money through there. That's why the Soros Foundation, or whatever you want to pick on, is this sovereign entity. Well, guess what happens when you kind of bring everyone under the roof of a consumption tax? You make more money. Well, guess what? You want to buy the big old nasty Maserati? Great, but you're going to pay a sales tax on that. And that's how it works.
Yeah. The end.
So I think what we're trying to tell you is, and this is totally cool. I love where we go, is what we're seeing is that I want you to rethink how you're thinking of this. And what Jeremy is putting out to you is you need to be thinking about working for yourself. I'm not talking about you're 78 years old and you can't do that anymore. I'm not talking about that. Okay. But when you have the ability to do it, that's when you actually get benefit out of it, in essence.
Well, if anybody everybody's working for yourself. You just don't realize it. Everybody, if you shift your philosophy to I'm working for myself, then you can't help but want to get better. You can't help but want to be better in your job and your career. And maybe you're working for a salary, but the better you get because you're working for yourself and you got a vested interest, generally the more you're going to be able to make. Think about it this way. Think about the church potluck. If you want to come to the potluck, what's the expectation? The
You
expectation
better
is
bring something.
you bring a dish. You bring a dish and, okay, you brought the Jello pudding, but you get to participate in the barbecue over here because you brought the Jello pudding.
Right.
And then you say, but what about the old widows and the elderly and the children who can't bring a dish? Well, we're going to take care of them because that's the biblical thing to do.
Correct.
And that's the way society should be. Now,
And
the issue
I think that's coming. I think you guys got to understand that's what we're talking about here. Okay.
Yeah.
But it's never going to be perfect either. So I'm sorry.
So no, that's the way that society should be. We all do our part. We all bring our dish. And then we take care of the widows and the orphans and the children and the elderly because it's the right thing to do. One of the things that, we're seeing, we homeschool our kids in our homeschool community. We see a lot of generational living starting to pop up, which I think is beautiful. You have a grandparent, children and grandchildren all in the same house or on a compound. Not a compound, but same property. Like we've purchased a little over 10 acres that my parents have built a house on. We're building a house on it. And so we're going to have that. And what we're trying to do and what a lot of the communities we're in are trying to do is, really bring back that appreciation for the older generation. We went through a good 40 or 50 years where kids were like, I'm out of here.
Right.
And they show up at the funeral.
Right.
Society has to change. We've got to go back to some better basic principles. And I think we're coming there. I think that we're going through that cycle. That fourth turning, a lot of stuff has to die off. You've heard me talk about that, right?
Oh yeah. It's a gorgeous conversation. So guys, as we're kind of wrapping up here, that's what I want you to do. Look at jeremywhaley.com because he has a different set of information on there, some of the fourth turning kind of stuff. Whereas the Trade Maestro stuff is more about like how can you take over your own retirement capabilities. And I mean, I guarantee you guys that will make a difference in your life. So go over there, check it out. You can sign up for different things. There's some other stuff you can kind of download. Isn't that right? The stuff in there you can download.
Yeah, I'm not as good at getting some of my my free downloads organized as I should be.
But you do have some things in there.
I do have stuff,
references on the site and things like that as well.
I have a lot more on Trade Maestro because that's really my business. The Jeremy.
Yeah, that's where you want to go for that stuff. Yeah,
and if people are on Telegram, they can find me. It's kind of goofy. My nickname for years has been J-Dub, so it's just JDUB, J-Dubs Nuggets, and it's a long story how we ended up there. But that's actually a really good place to interact and be happy to join people there. And you can just push that out with your link when you send this out or whatever. But, whatever we can do to help people, it's really all about up here. And I want to leave on this if I can. This is like my final parting shot. It's so easy to look at what the IRS has done, what the cabal has done, look at what big business has done. And then you feel like a victim. But listen, there are no rich victims. There are no rich victims. As long as we have that mentality, as long as we have that feeling, you're just going to be getting beat up. And so a core central part of everything that I say is what can you do? What can you do today? What can I do to take the next step forward right now? Okay, so I'm in this system with the IRS and with all the stuff that I hate. But you know what? There's plenty of people. I can give you a long list of people in the last 4 years since COVID who went from poverty to multimillionaire in this system. Mm-hmm. And I can go down the list of people in the face of adversity who have overcome in this system. Sometimes adversity is the greatest gift of all. And rather than sit there and feel frustrated, I wish it was tomorrow. I wish NESARA was here. I do too, but we're in this system. How do we win this game? And as soon as we're done playing Monopoly, we'll switch and we'll play cash flow with Robert Kiyosaki. But right now we're playing Monopoly. So we're going to play by the rules of Monopoly, and I can win that game just as well as I can win the game of cash flow.
And so, you can.
And if you have that philosophy, you won't be a victim of anybody. And that is the American dream. That is the American spirit. You say the cabal stole the American dream. No, they didn't. You gave it away. Take it back, and you can take it back right now by just saying, you know what? I'm in control. I'm not letting them tell me everything and push me around. I'm going to be in control of it, and I'm not going to be a victim of anybody.
And that's a great point to kind of leave it on as we're going there. I guarantee you guys, if you're looking that way, you'll have that kind of vision, and it's going to open up your dreams. It's going to open up your visions to be able to see it farther. So that's why I would say Trade Maestro really makes a difference for you too. So thanks so much. I appreciate it, man.
Thanks, Scott. It's good to see you, buddy.
All right. We'll see you.